All right. For today's topic, we will discuss about audit opinion. Okay, so when we talk about audit opinion, we'll try to return back to the audit objective. Okay, the audit objective will require the auditor to form an opinion on the financial statements based on an evaluation of the conclusions drawn from the audit evidence obtained and uh, clearly explain or express the opinion through a written report. So the standard format of the audit report is, or the audit opinion is what we call unmodified opinion. This is under ISA 700, which the auditor expresses that the financial statements are prepared in all material respects and in accordance with applicable financial reporting framework. The auditor shall form an opinion on whether the financial statements of in material respects in accordance with applicable financial reporting framework. So if the auditor concludes that based on audit evidence, the financial statement as a whole are not free from material misstatement or unable to obtain sufficient and appropriate audit evidence to conclude that the financial statements will be free from material misstatements, modification of report is required, and this will be under ISA 705. Now, the auditor's report, or we call it independent auditor's report, shall be in writing and we'll go through the major parts of the audit report. So the first one is the title. It is important that the title will include the word independent. So we know that the audit opinion or audit report is coming from an independent auditor. The addressee is usually the one who needed the report. So in an external audit, the addressee usually will be the shareholders or members of the company. There will be introductory paragraph, which include the name of the entity, financial statements audited, date of the period or the period covered, and any significant accounting policies that they have to take note. There will be also management's responsibility of financial statements. Of course, it will describe what the managers or the client's responsibility towards preparation of financial statements. And it will also state the auditor's responsibility with regards to audit engagement. So the auditor's opinion is the major part of this report, which will express whether the financial statements is in compliance with applicable financial reporting framework or free from material misstatements. In some jurisdictions, there will be reporting responsibilities or requirements that will be required from the auditor to include in their auditor's report. Of course, we need to know who signed the audit report. So commonly, it will be signed by the audit firm and there will be signature of the engagement partner. In some jurisdiction, it's not like that. It can be only the auditor or the audit firm. The date of the auditor's report is important because that is actually the end of your work as an auditor. So it needs to be declared in the auditor's report. And of course, auditor's address. Okay, so talking about ISA 705, there are three types of modified opinions. We have qualified opinion, adverse opinion, and a disclaimer of opinion. So when the auditor opted to prepare or issue modified opinion, they have to emphasize or mention the reason why they are modifying the report, whether it's materially misstated or they are unable to obtain sufficient and appropriate audit evidence. And of course, they have to mention their measurement of pervasiveness of the effects of whether that is a misstatement or limitation of scope in obtaining evidence. The auditor concludes that based on evidences or evidence obtained, the financial statement as a whole are not free from material misstatement, or they are unable to obtain sufficient and appropriate audit evidence, which they feel has a huge impact on the assertion or presentation of the financial statements. So this is an example of the opinion paragraph, which is this is unmodified and unqualified opinion. So you can see Here, they are mentioning about the supposedly name of the company, and they included the financial statements that they have audited and the year end. Also, they included the significant accounting policies. Now, the second paragraph will tell you whether their opinion is a favorable one to the client. So, in this case, it says here the financial statements present fairly in all material respects, or sometimes they will say give a true or unfair view of the position of the company as at, of course, at a particular date. And then you will see here it says also in accordance with international financial reporting standards. So they will mention whether the presentation is free from or materially presented fairly or giving true and fair view. And then afterwards, they will also mention that if the report is in accordance with the applicable financial reporting framework or standards. Now, when you talk about qualified opinion, there will be two things that we have to be mindful of. The first one is all about the evidences that the auditor needs to collect, and at the same time, if they collected evidences and then they have concluded that there are misstatements and not been addressed by the client or the management, they didn't mind any adjustments to correct that misstatements. Now, if there are misstatements or limitation of scope, or you are unable to collect sufficient and appropriate audit evidence, the materiality will play a big part on deciding whether the supposedly evidence of misstatements or the information that you need to collect are relevant or will affect the decision making of the of the client. Now, in case where you have to explain, of course, why you are qualifying your opinion, again, based on two things, misstatements or limitation of scope, you have to explain why you are issuing qualified opinion. And that's why in the qualified opinion paragraph, they will include the phrase except for. Okay, so which means aside from this one, everything will be fine, materially okay. But only on this particular portion, okay, they are qualifying their opinion. So that's why sometimes the qualified opinion, they call it except for opinion. So this is an example of the qualified opinion paragraph or paragraphs. So you can see here, same with the unqualified opinion, but the difference will be on the second paragraph, you can see here, they are telling about except for. Okay, it says there possible effects of matters described on in the basis of or basis for qualified opinion section. So there is another section which they will state whether the opinion was or what is the reason why they qualified the opinion. So except for that basis of qualified opinion, everything, okay, aside from this, will be fairly presented and complied with the accounting framework. Now, the next two types of opinion, we can call it the extreme cases of modified opinion. So the first one is we call adverse opinion. So in adverse opinion, the misstatement or the auditor had collected evidence with regards to misstatements, and that misstatement will be both material and pervasive to the financial statements. When you talk about pervasive effect, unlike with the previous illustration, there is what we call except for. So meaning only because of this, they are modifying the report. But in adverse opinion, it's quite different. The effect is huge. The impact is really persistent, or shall we say, that much that it can affect several items in the financial statements, especially the presentation. So there will be two things that may again will make the auditor issue adverse opinion. We have the first one is if the financial statement do not present fairly in accordance with financial reporting, and the other one, okay, or the other one will be the financial statement have been prepared or have not been prepared based on financial reporting framework. So an example of this, okay, this illustration, Same first paragraph telling about the financial statements that they're audited in the notes. Now, on the second paragraph, they will mention the basis for the adverse opinion section, which will be provided in another section in the auditor's report. As you can see here, it's obvious that they're saying the consolidated financial statements do not present fairly, okay, or do not give a true and fair view of the consolidated financial statements of the group as at 31st December of that year. That's the year end. And it says here, consolidated financial statement or performance and its consolidated cash flows for the year then ended is not, of course, in accordance with IFRS. So here, comparing with except for or what we call qualified opinion, here they are not specifying except for that particular item. Okay, we are qualifying, everything will be fine. Here, they are directly saying that the consolidated statement or the financial statements here will not be able to present fairly or is not in accordance with accounting standards. Okay, the second extreme case of modified opinion is what we call disclaimer. Here, the auditor is unable to collect or obtain enough evidences for them to conclude whether the financial statement is free of material misstatements. So, meaning comparing with adverse opinion, you obtain evidence, you have the proof. Disclaimer of opinion, you are unable to get the evidences that you want to collect. And of course, if you don't have evidence, you don't have basis of your opinion. Okay, when the auditor disclaims an audit one opinion due to inability to obtain sufficient appropriate audit evidence, the auditor shall state in the opinion paragraph that because of the significance of matter described in the basis of disclaimer of opinion paragraph, the auditor has not been able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion. And accordingly, the auditor does not express an audit opinion or opinion in the financial statements. Let's see the illustration. Same thing with the previous three opinions. This is a fourth one. Okay, but you can see in the second paragraph, it says here, we do not express an opinion on the accompanying financial statements of the company. Because of the significance of the matters described in the basis of disclaimer of opinion section, there will be a separate paragraph for that. We have not able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion on these financial statements. So here they are directly saying we don't express an opinion because they don't have the evidence or evidences that they need to conclude or to provide their opinion. Now, the fifth type of, or shall we say, the last type here of an audit opinion is what we call emphasis of matter. Now, if the auditor is issuing emphasis of matter paragraph, they are trying to draw the attention of the users or the readers of the financial statements with regards to their judgment or the auditor's judgment. And of course, that is so important for the user to understand what are the major effect in the financial statements. Most of the time, the auditor uses emphasis of matter paragraphs when the client is having significant uncertainty, especially with regards to going concern status of the company. So if the auditor had opted to issue emphasis of matter paragraph, they have to include that immediately after the audit opinion paragraph, and then they have to put the heading emphasis of matter. Included in the paragraph, okay, a clear reference to the matter being emphasized and to where relevant, disclosure and fully describe the matter can be found in the financial statements. So usually what they do, they will mention the note number, okay, so that the reader of the auditor's report will have an easy access or ease of access on the note or in which the auditor is trying to refer to, and indicate that the auditor's opinion is not modified in respect of the matter emphasized. So these are usual reason why the auditor may issue emphasis of matter paragraph. uncertainty relating to the future outcome of exceptional litigation or regulatory action, early application, if it is permitted, of a new accounting standards that has a pervasive effect on the financial statements in advance of its effective date, and a major catastrophe that has had or continues to have a significant effect on the entity's financial position. For more information on the going concern, especially in emphasis of matter paragraph issuance, you can view or watch the video with regards to going concern, okay, and how it will be applied. So this is an example of emphasis of matter paragraph, unmodified opinion still. Now you will notice in the opinion, it is just the same with unmodified and qualified. But the difference will be on the in the audit report pertaining to unmodified opinion, they don't have this particular paragraph. Okay, because here they will state emphasis of matter paragraph. Okay, so you can see here they are talking about note X. So the reader is now being shown to note X of the financial statements. So meaning the purpose is for the reader to emphasize or put their uh, focus, okay, additional focus on that particular note. Okay, if the auditor considers it necessary to communicate a matter other than those that are presented or disclosed in the financial statements that, in the auditor's judgment, is relevant to users' understanding of the audit, the auditor's responsibility, or the auditor's report, and this is not prohibited by law or regulations, the auditor shall not or shall do so and in paragraph in the auditor's report with the heading Other Matter or other appropriate heading. The auditor shall include this paragraph immediately after the opinion paragraph and any emphasis of matter paragraph or elsewhere in the auditor's report if the content of the other matter paragraph is relevant to other reporting responsibilities section. If the auditor expects to include emphasis of matter or other matter paragraph in the auditor's report, the auditor shall communicate with those charged with governance regarding this expectation and the proposed wording of this paragraph. All right, our references here will be ISA 700, 705, and 706. Thank you for watching the video.